Life insurance is one of those things nobody wants to talk about until they absolutely have to, and by then, it might cost you a lot more than it needed to. The difference between paying $200 a month and $80 a month for the exact same coverage could come down to a single number your doctor wrote in your chart 3 years ago. Here's what most people don't realize. The price you get quoted has almost nothing to do with luck and almost everything to do with a system called rate classification. And understanding it could save you tens of thousands of dollars over the life of your policy. Insurers are essentially running a background check on your entire existence, your health, your family's health, your hobbies, your driving record, and yes, whether you've ever touched a cigarette. Think of it like a credit score. But instead of determining your mortgage rate, it determines whether your family is financially protected when you're gone. There are typically 6 main rate classes, 4 tiers for non-smokers and 2 for smokers, plus a whole substandard category for higher risk applicants that most agents quietly gloss over. The top tier is called Preferred Plus or Super Preferred. And getting there is basically like qualifying for an Olympic team. Your blood pressure, cholesterol, body mass index, and even your family history have to hit very specific benchmarks. Miss one cutoff by a hair, and you drop a tier, and your premium just went up before you signed a single page. Now here's where it gets genuinely absurd. The same person applying to 2 different companies can receive 2 completely different rate classes with 2 completely different premiums for identical coverage. One insurer's standard is another insurer's preferred. And nobody hangs a sign on the wall explaining this to you when you walk in. Smokers, or anyone who has used nicotine in the past 12 months, are placed into an entirely separate classification universe, where preferred smoker rates can run roughly 350% higher than top non-smoker rates. That's not a typo. We're talking about a non-smoker paying $100 while a smoker pays $350 for the same policy, same age, same coverage amount. And if your health history is more complicated, maybe you've managed diabetes, or you have a few speeding tickets, or you rock climb on weekends, underwriters can apply something called table ratings, where each level adds about 25% to your base standard premium. Stack a few tables together, and your affordable policy just became anything but. Here's the historical truth though. People have been navigating these rate systems for decades. And the ones who come out ahead are the ones who treat the underwriting process like a job interview they actually prepared for. Controlling your blood pressure, getting your cholesterol documented, dropping a few pounds before your medical exam, these aren't tricks, they're legitimate leverage points the system itself acknowledges. The common misconception is that your rate class is fixed the moment you apply. But that's not entirely true. Some carriers allow reclassification after the policy is issued, and an experienced independent broker knows which ones do. Working with an independent agent matters enormously here because they can shop your profile across multiple insurers and find the company whose underwriting guidelines actually favor your specific situation. The actionable lesson is simple. Don't apply cold. Get your labs checked, quit nicotine at least 12 months before you apply, document every condition you manage well, and let a knowledgeable broker match you to the right carrier before a single underwriter ever sees your file. Discipline before the application beats hoping for the best after it. There's also a flat extra charge system separate from table ratings that applies to non-medical risks like a dangerous occupation or an extreme hobby, where insurers add a set dollar amount per $1,000 of coverage rather than a percentage. A skydiver and a software engineer can apply for the same policy and receive wildly different quotes for reasons that have nothing to do with their blood work. The deeper irony here is that the life insurance industry, an industry built entirely on the concept of protecting people, has designed a pricing system so opaque that most buyers don't even know what tier they're in or why. You can be in better health than your neighbor, pay more than your neighbor, and never understand the difference because company criteria and class names vary so dramatically that comparing quotes without context is nearly meaningless. But here's the philosophical core of all this. Preparation and process will always outperform guessing and hoping. And that's true whether we're talking about your cholesterol numbers or your financial planning strategy. Size your risk appropriately, do the work before you apply, and let the system reward you for showing up ready. We're completely comfortable with whatever outcome you land on, preferred plus or standard, as long as you walked in informed, prepared, and working with someone who actually knows the underwriting landscape. The goal is never the perfect rate class. The goal is the right coverage at the best rate your real life qualifies for. If you want help getting started, whether that's life insurance, real estate investing, home contracting work, or finding the right lenders, check out our links in the description below.